Good morning, good afternoon, good night, whenever you're watching this video. I appreciate the support, Cuzzy. My name is Joe Josh. I go by iChart Daily. Today is Thursday, February 22nd. I'm going to give a video back to you guys. I posted a poll, I think 2 days ago. Shout out to you guys once again for not only participating, but supporting the channel. The winner was, what time frame should I be using? This is an easy one. So it's going to be a very quick and simple video, but once again, informative. So let me start. This is not financial advice. This is a window to my thought process, a process that I've been fine-tuning for 17 years now. I've been in crypto for 9, going on 10. Learned this process by my father, who was an options trader for 30 years, and then I've just been fine-tuning it ever since. So there's long-term investors, there's swing traders, which is like mid-term, mid to short-term, and then you have day traders, okay? If you're an amateur investor and you really don't know anything about technical analysis or crypto investing or stocks or anything like that, and you're looking to get into charting and doing technical analysis, you need to look at longer time frames, okay? If you are a swing trader, you've been doing trading for a little bit, you understand the basics of technical analysis, overbought, oversold, MACD, RSI, etc., etc. You're looking at the weekly to the daily to around the 4-hour. If you're day trading, you've been doing this for a year or two, your portfolio is going up, you're profitable, you have more wins than losses, etc., etc. You're looking at the daily, the 4 hours, and then maybe the 45-minute, 30-minute, and 15-minute. And now I'll explain. Everything happens in waves. Everything. Regardless if it's a monthly, a 2-month, a daily, or a 30-minute, everything happens in waves. It's just the waves get longer on longer time frames, and the waves get shorter on shorter time frames. So I'm teaching you a process on this channel to look at a MACD to figure out momentum, to look at the RSI to figure out if you're overbought or oversold, right? Support, resistance, trend lines. This right here is a death cross. This right here is a death cross. This right here is a death cross. But the impact on the death cross or golden cross means more on longer time frames, okay? So if you're a long-term investor and you don't care about the nonsense, you're just looking to make 1 or 2 trades for the year, you could have literally opened up your trade at the golden cross on a monthly time frame. That would have been at 24,000 and you'd be up 2x right now. I'm sorry, 1x, right? 25 to 50,000. Or if you were opening up a short, you could have waited for the death cross. It would have been at 55,000, and you could have rode that short all the way down to about 15,000. Okay? So, once again, now let me explain something. Death cross to golden cross on a monthly time frame, right? 1 to 2 was 516 days. Okay? 516. Death cross to golden cross on a weekly time frame, 112 days. Death cross to golden cross on a daily, 27 days. Death cross to golden cross on a 4-hour, 6 days. Death cross to golden cross on a 30-minute. Let's do the long one. 13 hours. Okay? So, if I'm teaching you to open up longs with golden crosses, shorts with death crosses, this literally is 1 day, right? 6 hours, 6 hours. How long do you want to sit in front of the computer to see if your play is extremely overbought or oversold, right? This went from extremely oversold to extremely overbought from the 19th to the 20th. You had 1 day for your play. On the daily, this went from extremely oversold at 25,000 all the way up to here, extremely overbought at 34,000. This was technically from the 28th all the way to like a month, bro, right? You had 55 days, 27%. You go to the weekly, same thing, bro. 119 days, 90%. So how long do you want to wait for your plays to play out? You could do a 3-day, right? Go right in the middle. Death cross, the golden cross, excuse me. This short was technically a 17, 19% play in 57 days. Go to the 10-hour, right? This death cross down to here. This short would have been from here, the 43,000 to, let's just say, around here. This is 5% in 10 days. So you go to the longer time frames, you're going to have higher gain plays, but you're going to have to wait longer, which is easier for a amateur investor. The daily, 12-hour, 3-day, 6-hour, this range right here, once again, this is a 6-hour, right? You would have opened up your short here, technically taken profit here. Here's 8% for 3 days, right? 3 days for this play to play out. 7 days for 11%, 12 days for 16%, right? You go to the 7-minute, right? Here's a, look at this play, okay? 1 hour for 1%. Now, this is feasible. I'll end the video with this. This is feasible if you're using leverage, but you need to understand what you're doing because there's liquidation prices when you use leverage, right? You can't just open up the short here and it starts going the other way. You'll get liquidated quick if you're using too much leverage, right? So that's why if you're not using leverage, the easiest thing to do is the daily, 16-hour, 12-hour, 2-day, or 3-day. If you're a long-term investor, like someone that's never been in before, I'm looking at the weekly and the monthly. Because why? This hasn't lied to you yet. Every time it's death cross, it was the bear market. Every time it golden cross, it was the bull market. Every time it death cross, it was the bear market. Every time a golden cross, it was somewhat of a bull market, right? This right here went from 6,000 to 14,000. We death cross, we went from 9,000 to 6,000 because of the jab. We went to 3,800. We golden cross, we went from 7,000 to 70,000. We death cross, we went from 50,000 to 15,000. We golden cross, we went from, you understand? You start looking at golden crosses and death crosses on a 7-minute, it doesn't show the overall trend because if I zoom down, look how much, look, these are the days down here, right? 14, 15, so this is February. Look how many golden crosses and death crosses have happened. Meanwhile, the price has gone up. Okay, this is what I mean by fake outs. You can't say, oh my goodness, we've death crossed, but the trend is coming down, but yet we made a higher low here. And then if you zoom out, we've done nothing but gone up. You understand? So once again, amateur investors, you're doing monthly, 3-week, 2-week, 1 week. If you're doing swing trading, you're looking at the weekly for clarity, but you're really using the daily, 16-hour and 12. If you're day trading, you're looking at the daily for clarity, but then you're really using the hourly, 30-minute, and probably 10-minute or 15-minute, like around here. Once again, zoom anywhere in history. This play right here, you have to be sitting in front of the screen, waiting for the bottom to happen, see the RSI break the moving average, see the MACD form its bottom, it turns blue. Play is from here to here, right? 3 hours you sat in front of the computer, watched this play happening, setting stop losses, setting for 1.8%. I don't have time for that. You understand? Me, I'm doing weeklies and dailies, right? I'd rather play with more money with a lot less leverage, 2x leverage, 3x leverage, something so simple. And you open up the short here, open up the long here. I don't care that it took 90 or 100 days to make the 60%. If you're doing a 2-3x leverage, then you're making 180 to 250% in the same time frame. So that's the video, folks. Very simple. Once again, whatever time frame you're looking at, look at the waves. The waves will get lower and have less gains as you go in the shorter time frames. and larger gains and longer swings as you go to the longer time frames. Hope this video helps. Enjoy the day.